Well, good evening, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for the evening of Tuesday, the 18th of February, 2025. All right, my friends, let's go to the news of the day before we get too far. Not the free offers, but the news. And here we go with it. The MBA weekly mortgage numbers come out first thing in the morning. New housing starts and building permit data at 7:30. If you saw Toll Brothers numbers today, they were not pretty. I'll show you that on the chart in a moment. Redbook Group will update their weekly retail sales at 7:55. We'll get the Federal Reserve's meeting minutes for January at 1 o'clock. I don't look for any big changes or market moves off of it. API numbers come out at 3:30. I am beyond confused with President Trump. Last week, it was all about reciprocal tariffs. You have this much on us, we're having that to you. Then today he comes out and says, 25% tariff on autos. We'll start at that on pharmaceuticals and chips. Wait a minute, I'm confused here. I don't know what he's doing with this. So I think it's about intentionally confusing people, just letting them know tariffs are coming. I still don't understand what happens to the tariffs on Canada and Mexico, because reciprocal, well, what does that mean for that? Does it change the due dates he gave them? I have no idea, and I can't find explanations on it. Howard Lutnick was confirmed by the Senate as Commerce Secretary. Let's applaud that. That gets that part going. I don't know if you saw Bill Ackman. He's trying to buy Howard Hughes. There a lot of what's left of the company, especially the real estate. He's after that. And was a $900 million bid, just shy of $1 billion. That's something you got to take a look at. And he's been doing an awful lot of coming into the market and buying up companies and taking shots on the AI. You've got to pay attention to what the man is doing. It's very, very important. All right, so now let's take a look at the markets together, and I'll get this right. There we are. Let's start this way. The stock indices were higher, and early in the evening, the futures are higher again, too. When you look at Amazon, down another $2. I've still had a target. I don't know if we'll get there, of $216 as a chartist. I'm looking at a pullback of $22 in Netflix. Remember, we were just at $9.50, and we jumped up $100 a share. When we look at ARKW, it's down $1.78 as Tesla was down a fraction. NVIDIA, when it got up today to 143, I don't know if you realize it, it at that point had made back everything from when DeepSeek news came out and the market tanked. And all those billions were lost in the wealth of the CEO, and he has made that back, so to speak, in the market. Rivian up another 40 cents. I'm impressed with that. You're nowhere in uranium. It just keeps drifting here. And I'm not surprised Dell is up. You saw that they could be getting a $5 billion order from Musk's XAI. And I think that's very important. And in fact, I've heard people say that they've never seen anything like what Musk accomplished and how fast he did it in the XAI. He's already saying it's more powerful than DeepSeek. But you got to understand, this is like a baseball you throw around. Every week, somebody comes out and says, I have a new product that's better than this one. The one thing that seems to be consistent is they need powerful chips to run most of these products. DeepSeek didn't, but who cares whether it's powerful chips or not? They're all powerful to run these one way or the other. When we look at Palo Alto Networks, it broke out. It's now at a new high. So until the market pulls back to the 190 level, I think you have to be looking at where might it go. This break was the break that probably took out some of the longs, and then the market popped up today on everybody. You can see all it did is pull back and challenge the 18-day average. And I teach you, in red in the colors, I like everything colors, is the 18-day average. Green is the 100. Gray is the 200, and I labeled them on this chart for you so you can see it. And the Bollinger Bands will be in the dashed black, and the numbers are here. You know that that black number is it. All you need to do is look at the settlement, and you see it's 208.20. What was that? 208.28, and it's over the Bollinger Band at 205.35. It's pretty simple. You can do this other ways on the chart. In my morning subscriber videos, the ones that you can get access to with the free offer that ends tonight at midnight, by the way. That's on Tuesday, 11:59 p.m. Central Time. When it hits 12, my free offer's over on that. And I'll go through that at the end of this. But I'm friendly. Would I want my clients to buy over a Bollinger Band? Never. So I'd be patient, let the market come back to you. Are we going to embed? Embedding occurs when you have an overbought market and suddenly you get the slow stochastics and 3 days in a row minimum, or 3 sessions. You're on a 5-minute chart, it's 3 sessions. 15-minute chart, 3 sessions. 3 is the key. And as long as 3 of that occur, did we have it? Not yet. How often do you embed? Not a lot. So tomorrow, I wouldn't be surprised that you get a pullback where the market fights a battle. Can it embed or not? If it does embed, tomorrow's Wednesday, come Thursday, I'll probably be coming out with buy orders in the market for my subscribers. Dutch Brothers, staying over the upper band. So now remember, this band got very narrow. And in order to break out of narrowness, what happens is you have to have a pop like that. You never know where it's going to come from. You know this was the earnings pop, and the market jumped 25% like that. And now it's consolidating it. It's not embedded. I'll let somebody else want to trade it. Up here, if you fill the gap, you have too much risk to be in the market. CrowdStrike, still continuing up, embedded. Each break in the market's getting well bought. Notice how the pullbacks keep getting bought, and you have higher and higher lows. That's bullish chart. Rivian, I thought the market here in these videos would find its support between the 18, the 200, and the 100. You didn't quite make it this time. You did back here to those averages. And now I don't think you're going to visit that again for quite a while. That could be the bottom in the market. When I say the bottom, I mean the bottom. K-Web, the Chinese internet. Well, people are running like mad to buy in China stocks and Europe stocks because they're saying it is time to diversify. Part of this is these countries have to do things because these tariff wars are going to make them look inward to do things. Part of that's it. But as you know, when you look at this, and anytime you see chips or internet or anything on a Chinese ETF, the government is there pushing and pushing now. This is their favorite boys. When I saw Jack Ma sitting at a table with President Xi, you do remember for a year he went underground. He was scared he was going to prison for some reason. Suddenly, he's the doll child. This is Toll Brothers. They delivered 1,991 homes. They reported 2,300 under contract, but that's shy of what they thought they would deliver, 2,060, and well shy of the 2,452 that they thought they'd get new orders. Then their earnings fell. That, I think, is a one-off because of a commercial real estate. I guess they were in an apartment complex, and something happened with that. But the stock remains under pressure. It's got the bearish embedded rating. I see nothing friendly yet. Tesla still looks to me like a company that wants to correct further. It had, and let's take a look at this, an embedded reading that it just lost. And it lost it on Friday. Today the market's here. I wouldn't be surprised if the market tries to get itself up and get back to the 18-day average, but I'm not liking the chart action at all just yet. In XLF, the financial services, well, the trend is up, but you're coming into key resistance now at 52.24, which is the upper Bollinger Band. And this market doesn't like to stay over that band. Some markets do from time to time, others don't. That's one that doesn't seem to like to. Now, suddenly the industrial sector's coming alive. I think you're going to get buyers tomorrow at the 18-day average with really tight stops. I wouldn't be surprised if they put their stops at 137.38 to see if the market can pop to the 140.89 level. You have the trend up with today's close. You have the bias up as you're over that, and you've opened the door for that to occur. Doesn't mean it has to happen, but that's what I think the pros might be doing. XLE looks higher to me, probably into the Bollinger Band, but you're getting overbought already. In the gold market, this is where I have my clients. It's one of the many trades that they have on in the morning, and it came back. Now, it was amazing because this market was down on Friday, $4. And I'm going, maybe, just maybe, this is where this trend's going to end. And today the market's up 441. So it's back to where it was. Now it's got to prove it can hang in there. Otherwise, it could be that the market's going to get ready for a correction. At this point, still bullish. Silver market, still bullish, went up the other day to the upper Bollinger Band, and today just backed off in sideways action. But I see it as too bullish to be a market. I mean, too overbought to be a market I'd be looking at. In the copper market, the first challenge of a 100-day average and a Bollinger Band and not embedded. Bye-bye. I think the pros took money off there if they were still in it. BND, back to neutral. You tried the upper band, you tried the lower band, and you fell back to the 18-day average going, what do I do here? In the dollar, I'm still in the bear camp right now. And I think that the pros are waiting to go short in this area, but not in an oversold market. So it gets there. It has to no longer be oversold. Otherwise, I don't think they'll do much. And in FXE, you're overbought. So as much as it might fall back to 96.07 and look interesting, overbought keeps me away from those markets. It's really that simple. So as you heard me say, I've got a special that was on through President's Day. Today was the first, if you will, full day of trading afterwards. And what it includes is not only my free offers, but let's assume you had a trial to my research and you wanted to try it again. You didn't subscribe, whatever. And you go, should I look at it again? This is your opportunity, because typically you don't get more than one trial in a 1 year period or longer. So you have until 11:59 a.m. Central Time. You just go in there, free offers. You can sign up for it, or you can move your cursor up here. If you write me and say, I missed it, can I get it? The answer is no. Don't even bother the writing. Got to do it before 11:59. Got it? I'm Ira. You have yourself a great evening. I'll catch up with everyone in the morning. Take care.